Good evening, ladies and gentlemen of crypto, Twitter, and YouTube. It's great to be here. I want to introduce myself. I am Captain Cole, and here we have joined by Crypto ISO. Trip, how's it going, my man?
It's good, man. It's hard to believe we actually got to this point and figured out all the tech behind the live stream.
I know, it's
But
fun playing around with you yesterday.
yeah, it's good though. I think it's pretty cool because I've known you for 3 years now. I met you in CI. We basically built a whole trading curriculum together. Finally met for the first time in real life 2 weeks ago,
How
twice.
wild is that, man?
And
Crypto, Twitter,
now,
friends, and business partners, and finally actually got the wholesome meet IRL and touch grass together.
yeah, so continued part of the crypto journey that has been interesting to say the least. So yeah, it's good to be here, man. Happy to join you on the stream. Excited to get started.
Yeah, so should we give the little viewers some background to kind of how this all came into fruition, I guess?
Yeah, I think the backstory is always good. Bring in the human element.
Yeah, so people have been asking about this for a while, right? For us to kind of do a co-stream and just like share our thoughts in a more centralized manner. Hearing us talk, right? Like I think a lot of times people are like, "Oh, this discussion's great. Like, how can I sit in on these conversations, these phone calls that you and I have for like hours at a time?" And this is it, man. This is the culmination of basically us being able to kind of talk to one another, share our thoughts in the market in a way that people can watch together and listen in and kind of get an insight into our thought process.
Yeah, I mean, I think like my Twitter in particular during this bear market has been pretty active. Just because I think there's a lot of people that got wrecked, right? There's a lot of people looking for answers. There's a lot of people trying to figure out how to navigate this. And I was there at one point during bear markets. Obviously, everyone started somewhere. So for me, it's like a trading journal, almost like conveying my thoughts in real time to people. And obviously, this kind of concept of liquidity theory with Hyblock and everything is not the easiest to pick up, right? I mean, we we try to illustrate as best we can in Crypto Insiders, but there's two different communities with Crypto Twitter and Crypto Insiders. So it's like this is actually probably the easiest way to help people understand kind of the way we think and look at markets. And look, it's not always right. You're never going to always be right in this game, but if you can come up with more of a systematic approach where it's going to help you be more of a disciplined trader and understanding when to stay in trades, when to exit trades based on those parameters that you've kind of put in place. I think it helps you with confidence and discipline going forward, right? So it took a long time to kind of figure that out on my end, but looking at the various indicators we talk about, obviously the liquidation levels, cumulative lick deltas, helping people understand offside situations, especially in this range bound environment, right? We're in this choppy tape. It's very liquidity driven. And then the flip side, when we do come out of it, your kind of expertise in Ichimoku, which is something that I kind of have adopted over time, recognizing what environment you're in terms of trading in a trending market or a range bound market. It's kind of the best of both worlds to be able to navigate that going forward and develop, let's say, your own system. And then the idea is what? Teach someone to fish, right? It's like there.
Yep. Feed a man a fish, he eats for a day. Teach a man to fish, he eats for a lifetime. And, that's kind of been the ethos of Crypto Insiders and kind of your and I journey together into tools of the trade and like why we kind of built everything, right? It's like, listen, there's not a single trader that's right 100% of the time, nor do we even pretend to do that. And I guess, as I say that, the disclaimer should be, ISO and I are not financial advisors. None of the stuff we're going to talk about today or at any point on any stream is financial advice. It's just for entertainment purposes only. Everyone's kind of responsible for trading their own book. And at some point, you kind of have to separate yourself from the copy trade aspect and kind of learn to think for yourself. So that's kind of what we kind of try to preach in Crypto Insiders is like try to understand the thought process behind something. Because at least if you understand the systematic thinking, you can try to put together some conclusions based on X happens, then Y happens, right? And it's like enough time goes on, you journal these trades and, you start drawing conclusions like, okay, well, I know I shouldn't be using Ichimoku in a range bound market because I'll get chopped up. Same token, right? Like liquidity theory is great in a range bound market, but as soon as we start trending in one direction, you don't really see mean reversion very often.
Yeah. So hopefully that gives everyone a better idea of the backstory and how we arrived at this. And now we'll just kind of get into the charts, talk about some of the recent trades we have been in or are still in.
Yeah, this is
Overview
great,
of the
dude.
market. Really not that exciting, but there are some trades to be had. Obviously liquidity based. There was one from yesterday in Bitcoin. ETH had one, Litecoin had one. So let's just jump right into it.
Let's do it. So yeah, the first thing is obviously Bitcoin. That's kind of what I'm kind of mostly known for. Is I've traded Bitcoin for so often. That's how I've banged my head against this market, is trading Bitcoin itself, not so much alts. That's your specialty. And I had this 16.4 level marked out, and the reason I had that marked out actually was because if you look at the previous weekly open before we had that move to the 18Ks, this one right here, the previous weekly open before that move up was 16,400. That was, in my mind, a strong impulse move where we moved up from there and we went to 1800s before FOMC. And it was just a good support zone that, like, once we swept, if there was a buyback, it made sense that this is going to be a support. So, like, just looking at from a 4-hour candle, we had a nice little order block here. We swept it. I think there was a bunch of liquidations down to like 16.2. There was a big lick there, I think, on Bybit as well and on Binance. And again, we had a nice buyback. I think while you and I were testing the stream yesterday, we saw the Dalai Lama, right, on low time frame. Like, you had this liquidation candle here, and then just slowly but surely just powered its way through. Now the fact that we're back above in that 16.8 zone, that was the big level. We kind of like wicked through it, and we even touched that previous weekly open of 1700. I think we're going to keep consolidating and make one more jab right up here.
Yeah, I mean, that was funny yesterday, by the way. There was like 2 people listening to the live stream. We didn't even know we were live. Yeah. So for me, there was a couple different aspects to why we thought like the 16.3, 16.2 zone was pretty good. I can share my screen, or you can keep going.
Go for
it. Everyone see it?
Yep.
Cool. Yeah, so I think if you just step back and you look at this chart and you figure out kind of where the range is, right? Well, we have clear range low here, 15.5. There was liquidity there. We have basically the range high, 18.1. So, what I like to do is just top and bottom and then find your midpoint. And so your midpoint, 16,824, right? This is kind of the zone Zorn was talking about. You can see, like, one thing is just find where price interacts a lot. Okay, well, clearly right here, demand right here, demand right here, right? So when you come in back into these areas, there should be interesting reactions. And then on top of just looking at the range, there's moves within the range. So you have this range low, right? And we look at, see, where did the move finish? Well, we ran this high. So, people call this a deviation, stop run, a lot of different terms. But basically, you ran it and you traded back in, right? And pretty significant decline from that. So what I thought was 15.4 to 18.3. I like to look at Fibonacci's a lot, right? So 61.8 is one that I look at, obviously, a fair amount. I think most people do. Sorry, that's my dog. And so this 70.5 level, 16.3, was pretty interesting because there was liquidity there, right? It was also a key fib of the whole move, right? Identifying swing points of the whole move is, I think, the key, right? So range low, you can kind of be confident that that is your swing low. And when you run the range high, that's going to give you kind of confidence in the swing high. So you came back right into this zone. Basically, Zorn was talking about, we call this DBS zone, demand buyer support, because price had not actually come back into this. And you could see that there was an impulse here. So this wick, and we talked about it in CI in real time, was like, all right, this seems like a reasonable place to long, as long as you kind of hold basically like 16K.
Yeah. Yep.
And the play was to target essentially the weekly open back up here, which was where there was liquidity. We can look at that here.
I will say
So
just to that aspect, that 16.4 level, that was the first tap of that support zone. And, one of the big things that I think is commonly misunderstood is that, the more times a level gets tested, the weaker it becomes. So conversely, the first time a level gets tested, the strongest reaction should occur at that test. So the fact that we swept through that, we had a liquidation and kind of had a bounce from there. It's that depletion factor. So we've tested it once. I don't necessarily think maybe the second or third test will hold, but for the first bounce, it's a tradable long.
yeah, and these were also legit 100x longs. So for the people who are new to Hyblock or want to kind of understand this aspect of liquidity theory and how I look at this stuff, is I start a lot of the time with the cumulative lick delta, right? So at that point in time, or yeah, was that right? I think there was I
It was
thought there was
8 bill in shorts, right?
yeah, 8.3 billion in shorts. And so that can just like tell you alone that you just took out a bunch of longs and there's a lot of people short in the market right now, and there could be a reversal, right? And then you start to look at kind of this ratio up here of total shorts to longs. At the time, I think there was like 359 shorts and maybe 57 longs. Obviously, this is different here, and you have a reaction. It's not really that great of a place to enter because there's not really as a favorable ratio setup. So it was a combination of Fibonacci. You came back into an area that had not been tested. You were favored on a squeeze because there was a significant amount of more shorts in the market, and you had 8.3 billion in shorts to liquidate, right? So that's how you get those types of kind of like explosive moves up. And I believe there was like a yellow on the heat map. I don't know if you have that, Zoran.
Yep, yep. Give me one
It was
sec.
16.8 was like the target we were looking at initially. I think it was like 16.890 maybe or something, which close enough to the 38.2 fib back up.
So, this was bright yellow at the time, and we kind of just tapped into it at the 16.8 level. And, if you think about it from the chart before we're talking about, that was that opening price level from that Sunday opening drive before we went to 18K, 16,888, I think it was on most exchanges. And this liquidation heat map, just for those who are basically plotting potential liquidations at just on a heat map. So to see the darker it is, the less likely there's liquidations, or the least amount of liquidations there are. When it's a lot of liquidations. So just looking here before we actually had this move up, this liquidation move up, we ran right into the 16.8 level. As soon as positions get tested, they usually unwind and reverse to the downside. So yeah, we poked up into 16.8, even into 17. We see the purple turn, and now we went back down after that.
Yeah, and that's why this morning when I was like, all right, we ran 17K, like it's a conservative move maybe to close your long, because like part of me does think that I'll share my screen again, that if 16,280 kind of low was a swing point and you actually do maybe go test higher in the supply, then you're starting to look at these fibs up here, right? So this very well could be a situation where people short here, like this is holding above kind of like this level that is almost the mid range right now. Then you can probably target maybe some of the more shorts. I mean, there's still 2.3 billion in shorts that can be liquidated, right? So when we look for these delta reversals, which are essentially like, look at this green right here, right? And this is a small example, but you went from green to red, and the thing is, like, look at the sustained buildup here, that, you know, you had a bunch of people longing here, but there were still shorts, like a lot of shorts. You had this big move down, and now you're starting to, obviously, the number of shorts is
Unwind.
decreasing. But let's say this like runs up to maybe it's 17.2 or 3, right? You still
Yep.
have this area. Like, this is a big bubble here, 17,143. That's 151 million. And then what that would do is, as you start to take them out, you'll get flipping green. And then let's say, you know, we're trading towards those fib levels up here, and we've taken out these positions. This is a, you know, we're looking at potential scenario here, and the delta's green, and you're starting to see more longs than shorts. And let's say maybe because the reversal was at 8.3 billion in shorts, maybe it's 7-8 billion in longs. You're gonna have, like, in your memory bank, you can say, well, this is where you reversed on shorts. Like, maybe the longs are offsides now, and that's like the whole dance of a range, right? That's this whole game. Like, if you can identify these kind of key liquidity points, they typically tend to match up
With
with,
liquidation levels, exactly. Yeah. So it's like talking about, you know, if you look at it from a technical perspective, we talk about ranges, right? Range low, mid range, range high. And then when you overlay liquidity, you kind of get a feel for when the actual execution or trigger to take a trade is, right? Like, you obviously want to buy near the range low, assuming it's going to stay in a range. You want to sell the range high, assuming it's going to stay in a range and not, you know, have a range expansion. But at the same token, you know, if you look at delta unwinds and you see a bunch of shorts build up into the range low, and we saw that at the bottom, right? So it was like 8.3 billion shorts right under the mid range of the whole move. That's set up for a squeeze. So again, there's no magic crystal number what, you know, cumulative lick delta leads to an unwind in the other direction. But with time, you kind of start to realize that when you see certain pain points show up on the liquidity charts, and then you even look at the liquidations heat map, I'll show that real quick. You know, this is the 7-day look back, and if we see here, you know, coming from this 18.4 peak, slowly moving down. Yeah, we licked a bunch at the 17.2 level. I think that was right before that opening drive at 16.8. We kept moving. As we went down, long started actually building here, and we saw a bunch of liquidations happen right under the 16.4 level. So this bright yellow basically got ran into, tested, all these stops got ran, and then we just started pushing back up, right? So it's, again, like ISO said, it's a game of liquidity ping-ponging within a range, and you're trying to identify who's in the squeeze. And again, this works perfectly in a range, not necessarily perfectly, but a range, not so much in a trending environment. And right now, I think we can all agree that we've been in a range for at least the past couple of weeks, if not the past couple of months. You know, what will end up happening to that remains to be seen. But as long as it's within this 15,000, 18,000 range, you play it that way. You know, if it ain't broke, don't break it.
yeah. And you can start to kind of piece together all these little parts of the puzzle by using the liquidation levels and then the heat map. I started to use the heat map more recently because it helped. One, it has a longer look back. Two, it simplifies like big clusters of liquidity. Well, sometimes these bubbles may be a little confusing because you can basically switch the granularity, which is, so right, when I look at this, I like to put this on the most granular, and you can choose the exchange and the asset up here, because it's going to give me the best representation of the total cumulative lick delta by including all the positions on this granularity, and it's going to give me you know, a much more detailed look. Now you can just like come over here and put it on least granular, right? So that's going to obviously have a different cumulative lick delta notional amount because it's not using every position. Like, and so there's still 1.56 billion in shorts, and there's 27 shorts to 9 longs. So if you're looking at price right now, it's kind of in between liquidity, but like, you know, if we go down to 16.6, 16.5,
That's
you
your
know, this
potential higher low,
region,
right?
yeah, and then maybe you're getting a higher low off of this. And I would say that, and this is how I would actually maybe play this. It is, and this is where fibs to me are pretty important. So if we take a 15-minute chart, and we take Bitcoin and we say, okay, let's look at this high to this low, and pull a fib. Guarantee you I do it backwards, but we'll see. Oh no, it worked. Okay.
He knows how to use the fib tool, ladies and gentlemen.
So look, 16,573 is 16.5 is going to be your fib levels and kind of this zone, right? So this is how I would maybe kind of look at, okay, like if it came in here, maybe you bounce and you take out these stops, and then you come into this kind of demand level, right? Because you had an impulse here, right? This was big. This is where buyers came in. This zone, you know. So maybe you do come back down. Maybe it retraces to here, and then you go grab liquidity higher, and because maybe the move isn't done. I don't know yet, but it could be an interesting retrace level for sure.
Yeah, I think when we talk about the liquidity, right, and you pair what you just showed with the actual liquidation levels, this is what helps you kind of define your risk parameters and your execution. So instead of doing the lowest granularity, you do the high, and you see like, all right, so these are big bubbles, 16,620, 16,570, 1660, and 16,488, right? So this represents a large cluster of liquidity that could be engineered to fill a 20, 30, 40 million dollar long position. And at the same token, when you to what ISO just showed, you get some confluence, right? So all we're doing now is overlaying tools, basic tactical analysis to help us fine tune our execution and hopefully, have a slightly large edge compared to what just the regular technical analysis will do. So this combines a little bit of order flow, not a lot, but the cumulative lick delta and the liquidation levels are basically just SR levels that become pressure points, right? So if all these longs came in right here, at 16,890 and 16,929, they got ran. So most of the time, 100x, I believe we talked to Hyblock the other day, and 100x lick levels get liquidated usually between 9 to 15 minutes after they occur, which is relatively fast. If you think about it, right? If there's going to be a mean reversion to a liquidation level happening within 9 to 15 minutes, that's an edge you can kind of extract. So again, when we look at this, right, like I think the move's done just yet, and being is because we're starting to build some liquidity here, but we still have a lot of cumulative lick delta to unwind. So I think what makes the most sense, and I'll share my chart for a second. Hold on. Put it on yours and then move that over there. So when we look at it from this perspective, right, so we still have the previous weekly open, we have this monthly open level. And what happening potentially is we do one more poke above, kind of sweeping the shorts who think they're safe here to kind of move back down, sweep these guys right into the monthly open, which I believe is 17,150-ish, right? And from there, you can kind of have it move down where the shorts get stopped and they don't get the ride back down to support, right? So these longs, I think there's an abundance of long positions who want to get filled at 16.5 to have this low swept. But from a liquidity standpoint, it makes more sense to run the highs once more once the daily closes in about 35 minutes. And then from there to see what happens. Is liquidity taken? If so, I like the 17.1 area for potential scalp shorts. And at the same token, if it's not taken, we go lower first. The 16.5 area that Trip mentioned makes the most sense to play the bounce, right? So again, you're just looking for pockets of liquidity that you can extract and kind of set tight execution around.
Yeah, you just identified two areas on the chart where if price isn't near it, you shouldn't be trading. you just
That's
wait.
a great point. That's a great point.
Right?
And I think
that's what I try to do is like, I obviously try to spend my free time off the charts as much as possible, but this space consumes you, and so does this type of trading. But it was like, look, go set an alert at 16.5 and put one at 17.2 or something, or 17.1, and then you'll know that liquidity was just tapped. and then you can kind of pull it up low time frame and see what's it looking like. Or, I mean, you can set bids literally on the bubbles. Like I do that fair amount, but I prefer
Often,
to
very
do it
often.
with, yeah. So it's like, maybe you catch a wick to 16.4 because there was a 50x long there. There was a huge
Yeah,
cluster.
16,488, right? We'll look back at this next week and see if we just pierced 16.5, right? Because that's an interesting thought prospect.
And then I guess you would set your risk underneath the wick of 16,278, and you'd be targeting what, 17.2 or something like that. I'm not
Yeah.
sure how that setup looks, but in theory, that's that's like that's what you would be trying to do essentially.
Yeah, I mean, it's like a solid 1.5 plus risk reward. So this is just how we think about the market, right? So again, can it run down to 16.5 and like maybe dead cat up to 16.7 and then still rip to the stop? Absolutely. But that's just the game of probabilities that you're taking, right? So again, technical analysis, we spoke about this earlier today in Crypto Insiders. The technical analysis isn't meant to be predictive or hold any predictive value. What it's supposed to do is help you analyze what did happen in the market and provide you tools to kind of manage your risk and give you kind of if-then statements. Like we said, if price breaks below 16.7, let's look for longs in this area. If in the reverse side, if price breaks below or breaks above the 1750 area, look for maybe shorts in this area or back down. And again, it's a game of probabilities. You're setting if-then statements, and from there you can kind of optimize your execution on trades.
Yeah, I mean, if you look at equities too, it's kind of interesting how Bitcoin fared during the whole BOJ thing when futures were dumping. But like if you're just kind of looking at ES here, like 3,800 is clearly a big level, and those 4,200, let's call it, but realistically maybe it's 4,100. I think for me, it's always like price can take a little longer to get to areas than people expect, and that's kind of all this chop that's going on. So if risk starts trading back up, like maybe to fill in some of this, then I think Bitcoin probably does go up with it, right? And so then maybe you get your 17.2-3 zone first, and
Yep.
then you go get the liquidity. But it's really going to depend on, for me, is like the cumulative lick delta and what the notional amount is looking like in concert with the ratio of how many longs and shorts. And then are you hitting key fibs going back up, right? Because like the Fibonacci stuff for me, because this has been such a technical market. I mean, if you look at like every lower high on ES, it's been really close to the 61 point fib of like all the big swing points. So there's a lot you can translate this to across assets, and that's kind of how I look at it a lot of the time. So it's kind of a wait and see thing. Set some alerts and see, like this.
We were
Like
waiting for this move, dude, for the 16.4 move back from like 17, whatever it was.
a long time. Look
A
at
long
this.
time, right? And
Yeah.
again, people were longing all the way down. I did take some scalp longs myself, but like the big long was 16.4 sweep, and you wait for it, you wait for it, you wait for it, and when it happens, you react, right? So I think a lot of times traders are expecting volatility after a volatile move, right? Like we had the 18.4 FOMC candle, and then we had the breakdown. I think last Saturday night, basically where we broke down under 16.8. And we had two big moves, and we just kept bleeding down without any significant bounce, right? And everyone kept longing 17K and then under 16.8, etc. When you get down to support and then you overlay the lick delta, and we saw 8 bill in the shorts, that was the best time to take a stab. Again, could it have ripped lower? Absolutely. But you weigh the probability and the likelihood that a reversal is going to happen. We had a move from 18,400 all the way down to 16,200. If we're going to ping pong within a range, there's a lot of confluence to say this is a good place to punt along just under the mid range, essentially.
Yeah, I mean, like these stops here would probably be next, and then you're going to come into this zone, and this
Exactly.
is where
That's your 15.8 move. Yep, absolutely.
Yeah,
We'll
so
have
then,
that.
yeah, I mean, I'm sure if you look on Hyblock, you'll probably see where liquidity is. Like here you go. Like let's just turn on the most granular thing for BTC and say, like, if you're going to get a full lick run below 15.7, chances are you may not hit all of them, but you're definitely going to hit the 16 on the 50x, and that'll give you a wick down into that zone that we just looked at. So again, like, you don't need to necessarily diddle in this area. Like, if you get down here and you see a significant amount of shorts, and like similar to what we saw here, maybe you do. And then if you get up here and you see a lot of longs and it's starting to look a little offsides, then you play that zone. So it's like it's a wait and see thing for me with this liquidity stuff. But when it hits the area, you take a view, as you said, probability wise.
Yep.
What looks the most attractive.
We got a comment here I saw from Crypto Knight 79. He's asking, what are my thoughts, macro thoughts on crypto? Am I mostly allocated to BTC? You know, I will share my little more long-term view here, I guess. But you know, I think at this stage in time, we've been in a bear market for, you know, what is over a year. The Bitcoin chart has been in constant downtrend since November of last year. And likely-wise now, I'm still allocated to Bitcoin. I don't think now is the time to start allocating risk to other assets like altcoins. At the end of every cycle, if you look at the top 25 coins by market cap, you'll notice that a lot of them aren't there anymore by next cycle. So I don't think the time is now to start looking at altcoins. I think we still have a macro bottom to have. I don't think necessarily we are done with the selling, right? We have this 15,800 or 18,000, 18K to 15,000 range that we've been in. And we can stay in here a while. You know, Iso was talking about like how moves are taking longer to play out. Like, this can just ping pong for what is, you know, months before it actually ends up breaking up or down. And like, the truth of the matter is that I think now, as after the post FTX situation, after the market makers have kind of left the space, we had MNGR right the other day, kind of peace out, and the credit crunch, like, we are in a bear market, obviously, and we are probably not bottomed, in my opinion, yet. And I don't think at this point in time we're looking at a bottom immediately. And even if we do bottom, we're going to go sideways for a prolonged period of time. So what we're seeing in real time is the death of volatility, right? This move from 15.8, the range low sweep, to the range high sweep, took literally over a month to happen. You know, once we swept 15.8 or 15.5, I think, people were very bullish, saying, here comes new all-time highs, here comes a 20K break, whatever the case was. But the truth of the matter is, we just chopped along for a good amount of time, and then we had this little consolidation range, right? Like, how long was this? This was like several days where we just like ping-ponged for 2 weeks within this like small 17.3, 16.8 range before we finally had that move above the range high of 17K or 18K, sorry. So point being is, like, these moves are taking much longer to play out. And a lot of times traders who get paid to trade volatility are sitting in trades. And especially if you're trading perpetual products, as you should be on Phemex, you know, these trades take longer to play out and you're paying funding. So a lot of the times, the best position as a discretionary trader is to be in no position until you see something of significant interest, like activity around the range high or the range low, where you actually want to, you know, interact, speculate on what the possible direction is. And I think that's the best advice, or not really financial advice, but the advice moving forward is that expect these moves to play out over a longer period of time and have the patience to set these high time frame alerts and react once price gets to them. Don't take trades in the middle of this chop, right? So like, why would you take a trade in this chop? Maybe, do you feel you have a directional edge being sitting in this range for a day? Probably not. So I think, yeah, that's kind of my overview on my macro thoughts on Bitcoin and where we are in the market currently.
Yeah, I hadn't traded Bitcoin for a while either, because I was trading altcoins, and then I was like, wow, these altcoins just died.
That's true. Let's pivot a little bit and talk about some altcoins. You know, the only one I've actually traded recently has been Litecoin. I think based on the narrative, it has that halvening narrative, right? And a lot of times we've seen that Bitcoin and other products like Litecoin have their bullish move about 270 or 9 months before the halving event happens. So Litecoin, I believe, is in that 9-month span right now, which is why we kind of had this nice move off 47 to 80s, basically 2x off the lows. We had this distribution range, right? We were here for a good amount of time, and then we ended up breaking down from it. And where do we break down to? Again, just like on Bitcoin, that 16.4 level, we came into the 62 to 60 level, which is basically a support zone. And the first tap, we saw this wick, right? We talked about that recency bias or the depletion factor. First wick kind of wicked up. We had a second tap into it, a third, and even this like wick below a fourth, and then we started moving up again. So Litecoin is the only altcoin I see right now that's a major that has some more upside potential than Bitcoin or ETH. I actually swept this at 61.61, but I think, moving forward, it's at 65 and the underside of the range like 71. So you're looking at a potential 8% move. And if Bitcoin is going to go to 17.3, that's what 2-3% from here. Like, this is a higher beta play to Bitcoin. So Litecoin would be my first long that I'd be looking at in the altcoin space. I don't know if you have any other altcoins you've been looking at lately, but this is one I've been kind of thinking that has the most upside from here.
Honestly, after they all fell off a cliff, I wasn't looking at them as much. I noticed the volatility was kind of just drying up, same with the volume. And then I don't really look at Bitcoin dominance, but I don't know. It just seemed like the majors were kind of poised to move, maybe. I've never really looked at Litecoin, so this is interesting. Do you look at the BTC pair? Because that was one thing that I was doing a fair amount with.
Yeah, that was the 2017 meta, right? You'd do LTC, BTC.
Well, more just like a lot of times I'll look at a altcoin and maybe I'll use like a TD setup or something. And when you get the same exact setup on the US dollar pair and the BTC pair, it can add just like another layer of confluence to your conviction.
Yep. Absolutely. So yeah, looking at it here, it's also at the support level, right? Almost looks like a giant head and shoulders in the making. But yeah, this is kind of like support, right? So the LTC BTC pair is looking like it's holding on Bitcoin support, so you can assume it's going to have a higher beta to Bitcoin. Just looking at it from this perspective, this would probably be some sort of resistance, and that's like let's see, 6% move, 7% move. So we can assume, if Bitcoin's going to go up 2%, Litecoin might go up to 9%. That's your 7% LTC BTC move. So you're just adding confluence to the already, bullish bias on Litecoin.
Yeah, I mean, it came back into a pretty key demand zone.
Yep.
So
Pattis Locus asks, given that BNB fell off the cliff the hardest, will you guys be looking for longs? That's a great question. Let's see. Have you checked the liquidity on BNB?
No, I was
pull up
just
the
gonna do
BNB chart.
Does CZ allow us to look at liquidity on this point?
I believe so.
I don't know. No, it's on his exchange. Yeah, so we'll look at it. And then we can pull up a chart. We'll do some real time. Oh, wow. Okay, so wow, this is not clean to me, for one thing. 165 longs to 125 shorts. You have 161 million in longs right now. I mean, what was this down here where there were shorts? Sometimes hover over this. Okay, so 550 million in shorts. Obviously, they got squeezed. Where did it go down to? Let me pull up the chart of BNB. I don't look.
It's right down to 220, I believe.
Okay, BNB. Let's see what we got here. Oh, yeah. There you go. Here's a good example of, I guess you could have long this and it would have been a pretty good trade. Let's see. I guess we'll dissect this chart. I know every single person was talking about the $250 level on this coin because it had been defended so many times.
For so long, yeah. We had like 5 taps on it, right? That's the rule of 5s in play.
Oh, yeah. I didn't even see that. There you go. Yeah, so I mean, this is your zone, basically. And then, wow. So this is like big resistance now on the coin, right? So whatever, 268, 270, I guess you could call it.
Yep.
But we came down here, or we came down to 220, and it was basically here, which was where we'd identified 550 million in shorts. So then you're trading back up right now.
Yep.
So you're what, 250? So okay, what did we say? Where the resistance was up here, 260, 268 or something? Was
Yep.
what
Just
we
about.
Let's see. 260. I would actually add this line as like a maybe it's like this retest zone, right? So then that would get you probably into this liquidity up here. This is not a clean chart. Probably
Yeah, I think that's a good point to like make ahead. Like, liquidity is not always clean. It sometimes can be very messy. Like you see those lick deltas kind of flip flopping at all times. So there's no clear like, yeah, it fell off a cliff at us. But at the same token, it's had quite a few squeezes since it's fell off a cliff, right? A lot of times liquidity doesn't necessarily provide you an edge if the chart's messy.
Yeah,
And
but
then you just don't take a
13 to
trade.
11, like 13 versus 11, like this is not going to help me determine like if one party is offsides or this down here with 11 million in longs. Then this is obviously the least granular, but it's going to tell you like 260 is where the top liquidity is, right? So if you do get up here and maybe you run this, then you could literally start to count this and see how short liquidations will start to disappear. Then maybe shorting it back into that, but I don't know. It's not a coin that I've looked at too much. It definitely broke down from a key support level. I would say maybe 260 to 265 is kind of the zone where you might get longs adding there who could get reversed on back down.
Yeah, I think at the same time, it's good to mention that, if something doesn't look clean and it doesn't look like you have an edge, you just sit out. You don't take a trade just because you feel forced to take a trade, right? I looked at BNB just now as ISO showed it, and like I don't see a clear trade there. Like, yeah, it got nuked, but that doesn't necessarily mean I want to jump into a long. I like to have some sort of edge, and for me right now, and ISO as well, that's liquidity in a range.
Like,
Right
where would
now,
you put your stop even trying to short this? Like, if you're trying, like,
yeah, there's the risk reward is just very low at this point, right? Like it could go up, it could go down, but there's just no edge in either direction. At least for me, I don't see it.
yeah. Whereas, like, the long here, where you knew that there was a ton of shorts, I mean, even like these are your stops, right? So your swing points are going to be, you could have gotten a pretty tight setup. Even if you didn't use this to trade back up. I mean, it seemed like a noisy trade to me. Everyone wanted to short the breakdown and everything. And I don't know, I didn't pay attention to it enough. But have you looked at it on like a weekly basis or anything?
I
Oh,
mean,
wow.
it's breaking down from, the range that it kind of moved in the bull market, right? So, I think we've seen some Twitter influencers call it to go back to 40 and such. Like, is it possible? Absolutely. But like, I don't necessarily think that it makes sense to long or short it here. Yeah, you can start drawing a triangle even, right? There's no clear direction, in my opinion, that I wouldn't trade BNB one way or another at this point.
Yeah. If somebody's not like jumping off the page at me, I'll just move on.
Yeah, you just don't take the trade. It's that simple, right? I think a lot of times traders feel the need to trade, and that's actually what's probably going to kill them the most, right? If we zoom out a bit and we talk about macro, we talk about this echo bubble thesis, etc. I think at the same token, you have to take a step back and realize that everything that's happening in the market right now is likely going to cause most newer, inexperienced traders to kind of suffer death by a thousand cuts and kind of burn through all their capital before a clear echo bubble or a clear rally that's going to be more than just a bear market rally occurs, right? So if you don't see something that's high probability in your mind, don't force a trade. I think the worst thing you can do is force a trade, especially in these conditions where volatility is dying out. We have Amoeba in the chat. What's up, Amoeba?
Amoeba. He was our guinea pig for tools of the trade, man.
That's true, man. I forgot about that.
He was the he's like the original liquidity master, actually. Because
he's a student that kind of took it into his own hands, right, and built his own system around the concepts, right?
Yeah, he knows what's going on. Amoeba's in the game. He's got it down. Did you trade ETH at all?
I did, yes, I did, and I will show that in 1 second here. I have a request before that though from Crow from CI. He wants to know about ApeCoin. So let me throw on.
I know there's no liquidity on Ape because people I've been asked about the liquidity on Ape.
That's true. Yep. On Hyblock. You know, we're talking about Ponzi yields, etc. I think there's some fundamentals behind that, but you know, I'm looking at the chart. I'll throw on Ichimoku to get a sense if it's trending down. It does look like it is trending down, but I don't necessarily think there's an edge to trade it. Or you're asking when to short it, you know. Let's say we've been in that range, we broke down from there. You're looking for an underside retest potentially.
Geez,
yeah,
that looks like a giant bear flag or something. Maybe.
This,
I mean, it's all lower highs. I don't know. It doesn't look very good.
Yeah, it definitely looks like a potential bear flag, but again, that doesn't mean you short it here with a stop above here, because again, it can go like this, like that, like this, like that, and then you eventually get this range low retest, which is probably where you'd want to look for a short, with maybe a stop above this high and targeting, you know, this support down here, or a full move of the bear flag. But at the same token, you know, this can continue bear flagging up, and just because an asset looked like it's going down doesn't necessarily mean you should just hop in a short. So I would kind of be more patient with shorts right now, especially after this move we had from, you know, 18.4 to 16.250. To eagerly jump back into altcoin shorts, I think is a little nearsighted because of the fact that we're likely going to consolidate further, whether it's up or down in the end, we're still going to consolidate further. So from a capital allocation perspective, you're better off sitting and waiting, defining a trigger. So if I were just to spitball a trigger, you know, it'd be, so this is that range, let's just call it, that we broke down from. So if we get back to like if we get back above 370, this breakdown candle, I will maybe set an alert here, see how price develops over here before looking for a trigger to take a short back down to maybe support down here, right? So point being is you want to be patient, you want to set alerts, and you want to have a plan. Going into a trade just because you feel the itch to short, it looks like it's going to break down, great, but it's, you know, trading is a messy business and execution is everything. So the more patient you are creating a plan and then sticking to it, the more likelihood that there's, or probability of success, right? And that's kind of what we're looking for, is having an edge more one way than another. Let's talk about heat for a second though. Yeah, go ahead.
You can see the liquidity on the heat map at 16,450. You can see where the longs are. You see right here?
Yep.
On a 7-day look back. So people understand yellow is obviously going to be the bright spots where there's a lot of liquidity. So what is this, kind of the green? So 2.5, 3 billion. That's where the longs are sitting, which we knew that from basically when we went over the liquidation levels on BTC for Binance. Let's see. I think it was on the most granular too. Let's see where they were.
While you're there, ISO, we have a request from Sigma. Can you do some analysis on sushi? And I know that's your love and pride, sushi fish coin.
Sure.
So if you could
I'll
take
try.
a peek at that after.
So people know, like here, like 16.48. Like this is basically what we just
showed on the heat map.
Yeah. So you know that maybe that's an area. Hold on, I think I had to read. Or does it look different now for some reason?
That's a 7-day look back versus the 12-hour.
That's
It'll be brighter if you do 12. Yeah. Make it more clear.
I gotta zoom in on this stuff. I've realized. Yeah. Well, I guess it's 16.5, but also like 16.2 on the 12-hour. I think it's like that zone where those liquidations were is where the longs are basically sitting. Or
Yeah, you want to see them get tested. And if they get tested, that's kind of where you want to bid, right? As they close, you open.
Wait, that's why, guys. Okay. All right. I had to move it over because I zoomed in. Growing pains with the stream. It's all good. 16,550. Yeah. So this is where you would take out those longs. And then your shorts are what, 17? They're still up there? Yeah.
Yep. That's where you get that push into the monthly open, sweep that weekly open, previous weekly open.
Right. This is why you don't trade this area, in my opinion.
Yeah, there's no edge. You're trading a range or consolidation.
You're waiting for this, or you're waiting for this. This is the bright spot here. So maybe that is the impulse up. You run this, take some liquidity. I don't know. This is really like your 61.8 fib move back up, but I don't know how much fuel it has. But yeah.
I also don't think you do it in one go, right? So like the fact that volatility is dying, you might do 17.1 first and then 16.5, and then you do the move to 17.4, right? So everything takes much longer to play out.
Okay, sushi. I haven't looked at it in a bit. Let's pull up this chart. It kind of got depressing. It's one of those things where you just like milk it. You milk a trade for a long time. Like we were just running up and down Fishcoin. It was sick. And then all of a sudden, like it didn't work anymore, right? So the faster you can realize that it doesn't work and you move on, then probably the more money you're going to save too. Because I tried to long this thing a bunch, obviously, and like the moves were so quick. It was like lick to lick. But like, just look at this, man. Like 1, 2, 3, 4, 5. Like this is really, really dire support here. This is not like the best situation. If we pull on a weekly chart, Amoeba can attest to this too, by the way, because in Fishing Club, we
discuss fish.
Everyone tried to long this, right? So yeah, I mean, you are at support, like, but it's getting.
But what do we know about support? Is like consolidation above support is technically bearish, right? Like we talked about the deflation factor. It's finite, exactly. The longer level gets tested, the weaker it becomes. So like, yeah, can you long it for a bounce back up? Maybe, but like, is the likelihood of a blowout lower if Bitcoin eventually breaks down lower?
Yeah, I mean, look at these lows. Then you're going to like, I mean, we always said 70 cents. So,
that's like the FTV, right? Where FTV equals market cap.
Oh, bringing in the old
fundamentals.
Yeah, I guess.
Or LTV equals FTV or something of that nature.
Okay, hold on. Let me see if I can actually pull up how I would look at this.
While you do that, I will show some ETH, since that's what we were discussing before that. So ETH was a move that I traded as well, right on this 1250 sweep. I got 1248 fills, which are really nice. And again, Phemex, just beautiful fucking wicks. But yeah, we had these equal lows here at 1150. And basically, even this first move down to like 1154, people were asking, was that sweep front run? And lo and behold, it was not front run. We ended up sweeping it anyways. So when you see equal lows like this, there's a good probability that there's liquidity below it. And I remember looking at Hyblock, and we actually had a bunch of, I think it was like 280 mil long, like at like 11,449.5 or something very similar. So yeah, we swept that and we wicked right back above. And now, similarly to Bitcoin, I don't necessarily think we go back to the weekly open, which I think was 1280 or so, but like this level right here, this 1250 level, this seems like a good place to kind of take some profits. I already took some at 1121 or 1221, I should say. But looking for potential shorts, or if you're still not TP'd, This level up here could potentially be nice for a reaction back down. And I think we have some liquidations at 1253 and 1255. I believe the licks actually go up to 1270 if I'm not mistaken. So again, that would be basically this SSR zone, which stands for sellers support, sellers resistance, seller supply resistance. And if you were looking at it for a potential scalp back down, maybe you're looking at like 1255, call it, with a stop above this high. I don't think that you would run it, or you shouldn't run it, if it's going to mean revert back down to at least 1200 range or potentially even lower. This is what I would be looking at, honestly. So just like we talked about BTC, the trigger, if you break above this 11th or 1230 level, you'd be looking for a short above here. And similarly, if you broke below this 1200 level, maybe you're looking for longs in this 1180-ish level. I didn't check the lick there, but yeah, that's kind of how I would be looking at ETH. ISO, go right ahead and talk about some sushi coin.
Yeah, so when I was originally looking at sushi, yeah, it was in that like dollar range, right? And to your point about TVDL to market cap, obviously fully diluted. I look at the fully diluted market cap. With sushi, 250 million circulating supply. This is probably much greater than how many other coins need to be distributed in the market still.
Yep.
I don't even know. This is maybe more, but yeah. So you can go on DeFi Llama and you can look at a breakdown of total value locked. So you can see that there's 405 million roughly. So then on a relative value basis, like it trading here is attractive, right? Some stuff that's come out, obviously, with the proposals and whatnot, have had a negative reaction, like clearly. And if we go to liquidity, like the thing is you can get stuck trying to long a red delta and it continues to drop. But you'll get to an exhaustion point here, right? So 89 cents was where it traded. So that's like, I don't know, 0.5 like TVL, like based on fully diluted valuation probably. And then where was that? 38 million in shorts. To be honest, like that's not that much given like where the delta reversals have happened in the past on sushi, like 200 million, 150 million. So you could try to long it here and you can still literally keep falling because there's only 22 million in shorts on the most granular setting and you still have 99 longs to 221 shorts. Where in the past, like when we were trading it, there might have been like honestly like 30 longs and this whole thing was decked out red and these were pushing like 130 to at times like 230 million in shorts. So you kind of have to be cognizant of that notional amount, and also probably you can look at like things like Coinalyze.
Were you done with that, ISO? Can you look at Phantom? Amoeba says it looks decent structurally and from a lick perspective as well. So check out the licks on Phantom after that, and I'll share the chart after.
Yeah, I'll have to look at this, but hold on, let me look at Phantom. So the answer to me for sushi is like based on like this kind of really kicked support area and not that many shorts relative to when we've had past delta reversals. Yeah, even though fundamental valuation is attractive, like I don't know, like I think you really need a large buildup of shorts to get me excited about it. And this is a 3-day chart. So like, are there any like TD signals or anything? Not really. Like what is our daily chart here? Yeah, I mean, it just kind of continues to bleed. Like it would look, trading this was awesome, but you kind of just, I mean, look, the volatility is dying in this thing, right? You had a sick move and then
that's all basically, right? It's like people are struggling to realize that like all volatility is dying out and you should only be looking for very clear setups, not marginal opportunities. So try to get out of your bias.
This is your bouncing ball meme that's happening. Like
The euthanasia roller coaster.
God, man. And the funny thing is, like, we're trading this, getting all excited, and you're like, you had all this, right? So that should just give you some perspective about where the market is right now.
Yep, exactly.
You're getting excited about that. And also that you realize, like, whenever we get something like this again, even if it's on a new coin, whatever, like, the moves are so small right now relative to, like, you don't even need to be that early on some of these things. But like, this is so small compared to these moves that happened. So yeah, sushi's not
Attractive, to say the
it's
least.
not a FTM. Let me see this. Phantom.
Phantom looks good. Check the licks because I have the chart pulled up right here, and this thing I do like it structurally. I think you're starting to build this right, this flat descending line. I don't think it's ready yet. I think we're seeing like a potential inverse head and shoulders in the making, but I do like it. I mean, I do think if you get like one more move down here for a wick, probably lines up with some liquidity. And then you consolidate here and make a move back to like this level essentially. And yeah, I think this is actually probably the most decent after LTC. What is this? So if we got maybe
So there's 106 million in shorts on Phantom, and the last kind of like reversal was like 118. You guys see this?
Yep.
Like this whole thing, boom, boom. I don't know. This is more attractive than sushi.
Yeah, I agree.
58 longs to 241. That's kind of the ratio stuff I was talking about. I don't know. Maybe BTC does the move down, and you get like some of these potentially, or like, I guess let's just look on a less granular basis to see. What would,
Might not even be yeah, there's probably not a lot of licks, I'd assume.
There's just like not. Yeah, I mean, you look at this, you're it's 14-0. You say, all right, let's rock and roll, but you gotta,
you gotta wait for the game to kind of play out, right? So like, yeah, I think the lick delta is really red. You're gonna see an unwind, but do you long right here with a stop below that wick potentially? But at the same token, I think zoom in a little bit on that last move down. What are those? Yeah, those ones. If you can just zoom in on those a little bit to see what like a potential fine-tuned entry could be there.
Oh, hold on. Yeah. Is this how you do it? I forget.
I just grabbed the little cursor and just like over the licks. Yep.
I'll probably have to move it over. I think I can pan it.
Yeah, what are those? Yeah, what's that bottom pink?
0.1997. Then the 20. Also, so you guys know, like, that there's a method to this madness. So the number is going to correspond, the actual leverage amount will correspond to a color. So on the short side, you're going to have 25x, 35x, 50. So gray. Hopefully I'm not colorblind. This is maybe like a turquoise or a teal, and this is bluish purple. So you can see right here, right? Like, you can see these are where certain positions liquidate. And the way you can tell what the position is by identifying either a green dot, or let me try to find a red one. Let me run this again just so it's zoomed out, just so people
do a little more granular too, so they can see a little bit.
Yeah. So yeah, good old Phantom.
Oh yeah, man, so you can bad guy fumbled.
Yeah. So you can say, all right, this is where shorts entered at 0.203, and there's about, what is that, 260,000, 0.26 million. And so you would then go and match up the actual size with where they lick. So 0.26 is going to lick at, no, sorry, we got to find the actual, is it this one? Yeah. So 0.2049 is where that 50x short entered would lick, right? And then you would find This one might be hard just because it's green. There it is. See, you matched up that color, then it's 0.2067 and so on. And then the same thing can happen with longs. So 0.23 here, entered at 0.2027. So these are probably the ones you're trying to buy, the liquidations you're trying to buy, or maybe it's this one. So let's just say it's 0.34, 0.34. So you would be buying a 50x long lick at 0.201. And this is how you get very detailed in your analysis. And like, I literally put orders on these bubbles or like below them because price wicks through them.
Can you zoom in on the bottom on that last move down just to see what is potentially a fine-tuned entry from that bottom lick up to like the current support? So let's say from like 0.19 to like 0.2, what are the licks?
So on the longs,
Yeah, on the longs. See if you were like looking for a long entry, you could potentially just buy here and put a stop below that low at like 1880. But I feel like there's a better way to execute. What's to the right of that? So of your cursor, like those from there. Yep, all that basically. Can we zoom in there?
yeah. So that is. Oh, hold on. I'll just. Oh, that's my dog. Gets excited over liquidity. Oh man. Okay. So yeah, let's see here.
What's that 100x that I'm seeing right below that long? Slightly to the left.
So on the alts, they're actually the yellow is 50x.
Oh yeah, I forgot Binance doesn't give 100x on the alt. Yep.
It's BTC, and I think ETH isn't even 100x. I think it may be 50 or something.
It used to be 50. Yeah.
Yeah. So here's one 0.197782.
0.1977. Oh man, I'm gonna show my chart right here. This is literally what I was looking at. I was just looking at this on like an hourly chart. You said 19772.
Yeah.
Yeah, so that's like this. Like I would somewhere around here is where I'd look for long. But if you're saying 177, so like yeah.
I bet if you pulled up a 15-minute chart, there's a zone there that has some sort of consolidation before an impulse, is my guess. And that 0.197782 would have come from probably, I guess, where did they enter? So you'd have to find the 0.5. Oh,
So
right
yeah,
there.
breaking it down, basically this DBS zone essentially.
Yeah.
You'd be looking for that retest, stop below this wick, right? At 19, I think is it 19 even? Yeah, 19 even. And then you zoom out and you look from like a technical perspective, you're looking at a target up back to the structural range. And I'm sure if we pulled the liquidity, it's matches up pretty similarly, I'd assume.
You'd also be taking out a decent amount of longs, and your liquidity, your delta would probably flip even more red, getting closer to the last exhaustion point of 120 million in shorts.
So you have another move there, and then essentially you move it like that. Something like that. That's kind of what I'd be looking at.
You should pull a fib on the bottom, on that bottom wick to if you have that recent high, like if
So
the
like bearish.
61.8 is actually at that 0.19 level. I could see it maybe somewhere around there, or 70.5.
61.8 is at 2. No, I'm doing them reverse, aren't
Ah, you have my disease.
I? I do. 61.8. Yeah, like 0.2. The 0.5 is 1983.
No, I think you got to flip them because the
I did. Yeah. You're right. There we go. 61.8. Yeah, 1964-ish.
that would run that wick. You'd hit it. You'd get it.
Yep. Yeah, so you'd bid between the 5 and the 61.8, essentially.
Yeah, maybe I'll trade this.
Yeah, that's what I like it. Amoeba giving us 9135 is the June low.
Yeah, here and if you look on a and if you look on
9135.
the half granular setting, which is probably closer to what they called tier 3 on Hyblock.
Yep.
So you still have the 0.1997, and you're still 56 million, but look at the ratio. So like you take out those longs, and like there's really not that many longs left, right? So then you're going into the fib. Maybe that's your higher low that you're setting up for a move to grab more liquidity higher. And you could get tight here and put it like underneath here, maybe.
Yeah, right into that lick.
Yeah.
That's
So
like a 3+ risk reward. I like that. I think I might take this trade, dude. Set some bids.
see that? I had no damn clue what was going on with Phantom. Thanks, Amoeba.
Love it.
Oh
Awesome.
yeah, here 0.1935 is June low. Just saying. Yeah, he's got all the he has like a lot of that like monthly level stuff, and
Because it
which
matters, right? And I think that's the important thing. If you mark out high time frame levels and then you see how price reacts to them on low time frame, you can scalp high time frame levels on a low time frame and get pretty good execution on the first or second tap of those levels.
yeah. Have you looked at it versus BTC?
Oh man, no, because I sold it for a 50% gain in 2018, 2019 when I got listed on Binance just to watch it go up 100+x, man. It was one of my biggest alt bags I fumbled. So yeah, and I stopped looking at it versus BTC.
I wonder if Amoeba has looked at the zone here, or what it would look like. I mean, I guess this is, yeah, this is your coming back into it, pretty much this whole area. I think the
Makes
USD
sense.
thing is much clearer though.
Yeah. And again, I think with the perpetuation of stablecoin margin contracts, the BTC value is less relevant these days just because a lot of traders, especially nowadays, denote all their portfolio in stablecoins.
Oh yeah, one of them.
I'm slowly pivoting that way, but still a BTC maxi for better or for worse.
Yeah, man, these charts just look so sad.
They do.
But
It's the euthanasia roller coaster, but I really do like this trade, and I think this is one I'm going to be taking on Phemex. And again, you want to shout out Phemex, who is our sponsor for the stream. ISO and I spoke with Phemex and several other people over the course of several weeks, and we came to the conclusion that Phemex is one of the few exchanges doing things the right way at this point in time, especially post FTX debacle. They have full proof of reserves, and you can actually check your customer liabilities as like what your assets are on Phemex with a hash client UID. You can actually type it into their proof of reserves and see exactly what your liabilities are and see how it matches up with what they have on the balance sheet. So I really do appreciate that. And again, it really reminds me of the old BitMEX days, just because catching scam wicks, bidding Pico bottoms, Pico tops. This is all liquidity games, and this is where liquidity theory thrives.
yeah, they
And
wicked to 16,160
I
on
know I got
Phemex.
16,175 fail, but it wasn't enough to change my average too much. But yeah, that's the type of stuff you can get on Phemex. So you should be trading on Phemex, everybody. That's all we have to say there.
Yeah, I like it. I was doing Bybit a lot. I mean, obviously there's like a really big shakeup in KYC and security, and people freaking out about what their what their funds are if it's in a good place. But Phemex, when you trade a stable coin contract, they make you convert it to dollars first, which
That's
is kind
huge.
of interesting.
You're not taking any stablecoin risk that way.
Yeah, I thought that I was like, all right, that's pretty unique. That's a cool selling point. So, yeah, I wonder if BTC. I don't know. We'll see what happens. Yeah, we'll definitely keep an eye on Phantom. I
Phantom's
like
definitely
that.
on there. ETH, BTC, everything kind of nuking on the daily close a little bit. This was a 5-minute chart. Don't want to get everyone scared. Yeah, everything recently, and I feel like you can speak to this. I've been watching the DXY much more often than I ever have before. And with good reason, right? We've seen that BTC and other risk assets tend to move inversely correlated to the DXY. So not having the DXY on your chart, you're probably doing yourself a disservice, because you can have a super bullish setup on Bitcoin, and if DXY decides to moon, it's probably going to ruin your setup. So something to keep in mind.
Yeah, it's all the same trade. I mean, look, crypto went through its own problems with FTX and the fallout of another, a bunch of lenders, and so you had S&P rally like a decent amount, obviously 20% off the lows. Crypto didn't participate in it as much, but it's been pretty resilient honestly, in the face of the recent sell-off that's happened. So like yesterday was pretty interesting, but I don't know if you can read too much into it. There's kind of just a lack of participation
Yep.
in
Yep.
it. So what gets people interested in it again, I'm not entirely sure, but there's still things you can trade. And like, I'm not even trading with a lot of money because one, it doesn't make sense right now, but it's like you can still take some small accounts and run them up, or just use it as like, okay, this is actually maybe time to practice for when the market does become hot again, right?
I
Because it
think that's
will.
also important, right? It's like what is leverage for? Leverage is used to reduce counterparty risk. It's not used as a tool to increase risk. And what does that mean? So if you have an account of, let's say, $100,000, you don't have to deposit that all into the exchange, right? You can deposit, say, $10,000 and use 10x leverage to trade your account of $100,000. And that is actually how you're supposed to use leverage, not the way you see a lot of crypto Twitter influencers propagating it. If I use 5x leverage, I make 5 times more profits. Well, you're increasing your position size by 5. That's not trading with risk management. That's trading like a gambler. So yeah, I think you should keep less funds on all exchanges at this point in time, but use leverage in the smart way. So again, you have a $100,000 account, you keep 10,000 on the exchange, and you use 10x leverage to kind of take your trades.
Yeah. The dollars, pretty interesting chart. I mean, if it's setting up for like a bounce, I mean, it did come into 103 area, right? Like,
Yeah, I was watching that, and also on the Ichimoku, it was like on a weekly Kijun, I believe.
like everyone's waiting to see if this is like gonna find support and go up. Then that's gonna push all your equities down and crypto, unless there's some like
Absolutely.
decoupling event. But yeah, I mean, like, just draw a support or quick, like this zone, I guess 102. I mean, look at this low here. Like, that's a 5-day 9, but it didn't really activate. What's the weekly look like?
I think it was on a TD9.
Oh
XO
man,
shared that.
it is a 9. It's got some work to do though. But yeah, I mean, look at this high. So you can go how far over? Have you looked at a monthly? Also, like FX, like moves like over time don't happen like crypto so much.
Yep. I think that's what people need to realize. Things move
Like this stuff takes a
slow.
long time, which is why we could be in this shit for a long time. But like, look where this topped. Like, this is close to your high here. I mean, is this your lower high? And like, you have to basically come down and break this though, from a market structure standpoint, on a monthly to make a lower low. Really, realistically.
Yep.
This is your swing, right? So, I haven't really looked at this on a monthly, to be honest. And then on your weekly, like, do you view this as a swing point? I mean, there's like not there's, look at these. It just like went parabolic, right? So do you come back down here? Let's say you come into here and you bounce, right? But you can still like probably go to, maybe 107 or something, right? You make a lower high and then you're going down. If this just comes down and bounces, that's how you get like your S&P down to like new lows next year, right? And
Yep,
what's the
exactly.
culprit of it? I don't know. I don't know yet. I'm not going to try to predict that, but something to be wary of. Like the rally, like this rally, right? 2 months, 60 days, let's call it that. Rallied 20%, I think. I mean, dude, look at this. Like mid-October was your top, and then here you are. So that was the move, right? So if you're coming back into support, maybe be cautious on
On
with
all
risk.
risk assets. Yeah.
Yeah.
Yep.
Which is why, like So liquidity is helpful to trade. It's also super short time frame for these instances. And I don't know. Don't fight what the market is telling you to
The
try to trade
trend is
it.
your friend. Yep, absolutely.
Yeah.
I think that's the overarching point, right? It's like all these moves that we're potentially sharing and talking about, these are things you need to, as you know, Trip, you say, catch and release. Like, take your profits where you can get them. A lot of traders are going to end up, wasting or losing a lot of their portfolio and have less portfolio by the time the inevitable echo bubble comes around. And you want to be liquid then, man. You want to have the capital to make it all back, quote unquote, right? So to take marginal opportunities just for the sake of trading, go get a hobby, go outside, go do something else that doesn't require staring at screens 24/7. Set alerts for trades and wait for them to come to you. Patience is like the most underrated edge discretionary traders can have and use.
Yeah. When does CHC find some support and try to make a lower high?
It looks like it's in a parabolic move down.
I mean, this is your support, like on the chart, basically. After that, it's to here.
It looks like
But
Ripple, man. 2017 Ripple.
so then it's probably got a couple ridiculous pumps left in it. I don't know.
Yeah, maybe a few more.
It looks like you could like do that maybe, and then just you're dying, or it's just gonna die. But I mean, let's look at. I haven't looked at the liquidity on it in a bit. That one was, yeah. I mean, you could play the bounces on it for a little bit, but it was fast because it was being sold aggressively, and that's more like the spot selling versus perp buying. You kind of have to have both, which is, I guess, talk about next stream because I'm still refining my approach on that. But Hyblock has this like probability histogram that allows you to look at top trader positions and global long positions, and you can see like basically retail versus whales and who's in control. Amoebas clued me into that one. But yeah, so like liquidity basis, 262 million in shorts, which is a fair amount. I don't know. Maybe you start looking at CHC again.
For a
This
delta
is a
unwind.
pretty favorable ratio, 352 to 44. You're coming into support.
Like a 8-9x ratio.
Yeah, maybe grab some of these. 10 cents, 358.55, and then I don't really. I mean, we'll set some alerts. We'll watch that one. Could still be a pain trade, but here's a pivot. 9 cents.
9 cents it is. That's the alert. You set the alert at 9 cents. See what it does. If it goes below and reclaims, maybe that's the long back up for a dead cat.
Yeah, I mean, it's 2 touches of support basically. You sweep this low, maybe get that one. Your third test of a range low. I don't know. This could be an interesting level. I'm going to set some alerts on CHE for there because there's a lot of shorts. I'll check the open interest too. We'll put it in CI. We'll keep an eye on it.
Makes sense.
All right. How much time was that? I mean, I feel like it went by really fast.
Yeah, it's like an hour and a half almost. This is kind of flown by. If you guys don't have any other last requests, I think we'll kind of start to wrap it up here. I mean, this is, our first stream. We're happy to hear suggestions moving forward, but this is kind of what we're looking at for the next foreseeable future. This is a lot of fun, and I really think that there'll be a lot of good trades to share in the future. Just talking about it now, between Hyblock and Phemex, there's a lot of cool things in the works. Some things we can't talk about just yet, but stay tuned. Definitely use Hyblock if it's something that you believe in. If you understand liquidity theory, if it makes sense fundamentally to you, potentially you can gain your own edge from using it. And if you're looking for an exchange now, I think a lot of people are, and I get that question very frequently. I know ISO does as well. We chose Phemex, and for a good reason, right? We talked about the no KYC 50K daily withdrawal, their proof of reserves, etc. This is where I see being my new home, similarly to how I look fondly back at BitMEX from 2019. So yeah, guys, that's kind of everything I have to say on that. Any closing thoughts, Isa?
Not really. Just did a lot of analysis. I hope it was helpful for people. But yeah, I don't know. I think this is fun. It's a good way to hang out. Just keep people in the know, keep people engaged. It's really easy to just be like, crypto's dead, I'm out of here. But I think you just need to, find a community and like stay a part of it and just keep the dialogue going. Constantly trying to
Agreed.
hone your skills.
Agreed. Now is not the time to check out from the markets, right? A year of consistent selling. Now is the time to check in and get ready for, what we think is a potential crypto macro bottom before some sort of echo bubble where we will do multiple % rallies. And we look forward to kind of sharing that as it develops over the next several weeks and months, ladies and gentlemen. So with that, thank you very much. I'd like to thank our sponsor, Phemex, once again. And we look forward to more streams. We'll be here every Tuesday at 23 UTC.
Oh, yeah. I'll have some claws next time.
Make it even more fun. I like it.
Yeah, just a couple. Gotta
Just a
take the
couple.
edge off with
Absolutely.
liquidity.
All right,
All right,
ladies
guys,
and
take care.
gentlemen.
Super fun.
Take care. Thanks again, and we'll see you soon. Take it easy, everyone.